This is an audio recording of an X Space courtesy of thecoinrepublic.com, the go-to place where you can keep up to date with what's happening in the crypto space.
Take the first step towards online privacy. Get NordVPN.
This space was recorded on 4th of March 2025 and features an interview with Tom Luongo. You can find his work on tomluongo.me.
Morning, Rich. How are you?
Tom, very, very good. Thank you so much for making yourself available. And this is a new venue for you and I.
Mm-hmm.
And this is courtesy of thecoinrepublic.com, which is an up-and-coming crypto news website. So thank you to them. And I will be doing these pretty much every Saturday, covering Bitcoin, crypto, and related issues. And then I asked for everybody who's listening, I asked Tom Luongo from goldgoatsandguns.me to come on because Tom's been a regular guest on my channel for many, many years, and to come and talk about what's happening in the Bitcoin space. Tom, do you want to start just by introducing yourself?
Sure, I can do that. My name's Tom Luongo. I am the publisher of Gold, Goats, and Guns newsletter, podcast, blog, you name it. I'm here on Twitter at TFL1728, have been since 2009. I also write a financial newsletter for Newsmax at Ultimate Wealth Report, contribute to Financial Intelligence Report as well, which is an anthology newsletter with a variety of writers. I've been writing there since 2013. I cover the intersection of capital markets and geopolitics, as well as crypto. I'm an old guard Bitcoiner going back to the original, basically the founding of Bitcoin back in 2010, and writing my first article about Bitcoin back in July of 2010, and hanging out on the Bitcoin forums back then. So I followed the crypto space, both intensely and at times a little derisively. My relationship with Bitcoin and crypto in general has been complicated to say the least. But I think we have a bunch of good things to talk about today.
Yes, and I don't know how long I've been following your work for many, many years. One of the things that I really appreciate about your work, and I've noticed this, like tracking your analysis. So for those of you who are unfamiliar with Tom's work, do check him out, Gold, Goats, and Guns. But it's like what you're really, really great at, Tom, is looking at what's happening at the macro level. A bit like, because you're a keen board game player, playing strategic board games, looking at what's happening between the United States and the European Union and Russia and Ukraine, and then how, like you said, it intersects with money. Because there's a saying, you got to follow the money. And in many, many instances, now you've said that it's going to play out is how it's turned out. And that's really from your skill as an analyst, as a board game player. Now, go on, Tom.
So I was going to say, and former research chemist, and I've been doing this thing my entire life. So it's just the way my brain works. It's a unique set of skills. I don't say it's a unique set of skills. It's my set of skills. And in this business, certainly in financial analysis, your goal is to be more right than wrong, and create for people a tradable edge that they can work with. And what I mean by tradable edge, I mean it's something better than a coin flip. Signal that gives you a coin flip is useless. Oh, it's great to keep you on the hook if you're someone selling a narrative, because half the time you're right and half the time you're wrong, and you trumpet the things that are when you're right, and you trumpet your wins to the high heavens, and you ignore your losses, and that's how you keep going. When you have a track record that's above 65-35, that's when you start to break away from what I would call the punters. And I'm not saying that disparagingly. There are plenty of really good people in the industry, but there are also a lot of people that are incapable of updating the software as to how the markets actually operate. And we're in a time of incredible change and incredible dislocation, both in the capital markets and in the geopolitical space as well. And because of that, a lot of people are having a really hard time making actionable calls in this environment that matter, like in a time frame that matter to most humans. So I'm not just saying like this week or next week, but within 2025. There's too many people in this industry who are incapable of taking that view, and they want to just stick to a particular narrative that they developed, say, 15 or 20 years ago, and then stay with it. And that doesn't work. and eventually they marginalize themselves. But, and one day I might marginalize myself because I may not be willing to update my software. And then at that point, it'll be time for me to move on and do something else.
Yes, yes. No, thank you, thank you. And I listen to your. I'm one of your patrons. I listen to your blogs that you do, your podcast that you do for your patrons, and you've said some really incredible stuff, including, and I'm sure we'll get to this. We won't start with this straight away about what's going to happen with Ripple, and we are going to be talking about crypto in this space. So, and people will have an opportunity to ask questions of you, and I may, they should tap them into. I don't know how it works in the space. So it's only my.
I've actually hosted spaces, Rich. I know how to do it. It's not hard. You just tap on the person and then promote them to speaker, and then wait for them to pop in. It's just like talk radio. So.
Right. Okay. All right. Well, thank you for that. Thank you for that. All right. So I invited you on, and I wanted to speak in particular about what's happening with the Trump administration's policies towards Bitcoin and crypto in general.
Sure.
And we had the White House summit. I think that was yesterday.
Mm-hmm.
And Bitcoin took a dip.
Sure.
And do you want to start by saying what were the decisions that were made? What's the executive order? What are the ramifications for that?
Sure. I don't know what came out yesterday. I was busy all day yesterday, not looking at what Trump actually put on. If he put anything new on the table, it didn't seem to me that he did. But what I've seen so far is the following. Let's remind ourselves a couple of things before we get started, which is that I just published a podcast with my friend Chris Sullivan about how to look at capital markets. And Chris made the very salient point that we spend every day, every day, including especially in the media, to train us and ask ourselves the post hoc question of why markets move. That's the wrong question to be asking. We should be asking why markets move, because we don't know why markets move. We just conjecture. What we should be asking ourselves is how markets move. How are they capable of making the moves that they made? And that's actually going to wind up getting you far closer to the potential why. Right? Why? Asking why first doesn't make any sense. You should be asking how. How does Bitcoin drop $10,000 in a day or $9,000 in a day? What's the mechanism for that? And who put the orders in? And who do they represent? And blah 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 blah. And once you get there, then you can start to craft a model of, well, they did this because, and then you get to the why. So just to remind everybody that we're going to be taking that framework, to take all of my commentary today from that framework. I don't really ask questions about why markets move. What I've been focused on for years is trying to get a better sense of building a model of how markets move, and then that's a good way of describing how the potential for getting closer to why markets move. And that's when you can start to make bets, and that's how you can start to establish a track record and a heuristic for whether or not your analysis of how you think the markets move plays out. So with that said, the Trump administration is a big why, right? And a potential what. But, in response to whatever it is that Trump wants to do, there's going to be a whole lot of how. There's going to be a whole lot of movement in the markets by people who are ultimately his enemies. So Trump is making a very positive move towards Bitcoin. I think the most consequential thing, notice of the week, isn't anything directly to do with Bitcoin. It's to do with Michael Barr at the Federal Reserve stepping down head of the Doge Yard. Because as Caitlin Long, the CEO of Custodia Bank, and I've talked about, and she's talked about ad nauseum, that it was Michael Barr that was the point man for Operation Choke Point 2.0 and the delegitimization and the slowing down of any kind of crypto banking and crypto businesses in the United States at the Federal Reserve. Barr was the snake in the grass at the Fed, along with all of his minions, to retard the growth of the crypto industry in the United States. Well, why would he do that? Well, and then ask the question, why would he? Not just why would he do that, but who does he work for? Who does he represent in making those decisions? Because he clearly represents a particular faction, and in my mind, that faction would be centered in either Brussels and or London. And the reason is because they've made it abundantly clear that they're uniquely and hostile to Bitcoin and to digital assets in general that aren't their preferred outcome, which is a programmable central bank digital currency, nominally the digital euro. So when you create uncertainty in a market, you retard capital flow into that market. Anybody who moves money understands that regulatory uncertainty is the death of investment. And so Barr removing himself from the scene and is a big positive step for Bitcoin and for digital assets in general. It paves the way for digital asset banking in the United States, or at least digital banking access for businesses. And that's a big deal. It's a huge deal. It's been a fight that honestly has been going on in the United States since, Bitcoin first passed like $200 a coin, because they could see what was coming, and they spent a lot of time trying to figure out ways to retard Bitcoin's growth in the United States, either through ruinous tax policy or regulatory uncertainty, as I mentioned, or whatever. And then Barr, working with Elizabeth Warren at the Consumer Financial Protection Bureau, which is basically her own like little branch of government, were shaking people down, debanking people, threatening them, yada yada yada, in order to stop them from doing the kind of business that they didn't want them to do. And so once you start, mapping out, who the adversaries are, then you can start to figure out. Then it becomes really obvious when people start acting in a particular way. Like, oh, well, they're acting. If you think they're an adversary to Bitcoin, and you think they work, and they ultimately owe their allegiance to this faction at the geopolitical level, then when they continuously do over and over and over again, not just one time or two times, but 20 times, make decisions that support that particular thesis, I'm going with that until falsified otherwise. And that's 90% of what I do. So I think the Barr announcement is huge. And it was something that, had to happen. And it also, and by him resigning over the threat of a Doge audit, actually helps Jerome Powell keep his hands clean, because then he doesn't have to deal with this problem internally at the Fed, and lose any support he has internally at the Fed to continue to do what he's doing. And then, of course, Trump is making noise about wanting to add these various digital assets into the sovereign wealth fund that he's ordered Scott Bessent, the Treasury Secretary, to create. So, they're not going to go out there into the market and buy Bitcoin, which is, I expected this. I've been, I first started talking about this and writing I wrote about this in Newsmax in January's issue or February's issue, and I've written about it, talked about it for the patrons on Gold, Ghosts, and Guns as well, is that that it was always going to be, let's start with the seized Bitcoin, right? If you're going to create a quote unquote 1 million Bitcoin sovereign, reserve within the sovereign wealth fund, well, the first thing I did was ask Grok, well, how many Bitcoins does this U.S. government have? How many have they seized over the years, and how many have they sold? And they seized about 215 or 220,000, and then they sold about 13,000, and they're down to about 207. Now, do they own the keys to those Bitcoin? That's a good question. No one knows, but it doesn't matter. They own them. They have access. They have control over the accounts. I would assume that they do have the keys to those Bitcoin, and they're going to use those. And what they'll do is they'll issue other financial assets as using that Bitcoin as collateral. That's Bitcoin's power within the financial system. Like gold, it's a form of pristine collateral. And what I mean by the word pristine collateral is that there's no counterparty risk. You either own the keys or you own the gold coins or the gold bars, and your counterparty risk is someone beating you over the head for your 24-word seed password, or someone coming in and invading your house. That's as pristine as collateral gets, folks, in the world of finance, right? There's no counterparty risk. There's no derivative contract written against it. There's no, there's nothing out there. So these are very significant moves. I mean, this is the dawn of the United States creating regulatory certainty to start building proper digital asset-based businesses, including like Caitlin Long's Custodia Bank, which I hope she gets her FedMaster account, in light of all this coming out. And Trump himself said this is the end of Operation Choke Point 2.0. So all of those things together, I think that we're really at a moment where, we're at an inflection point in U.S. policy towards it and digital assets.
Tom, that's just incredible. And one of the things that's really great about your analysis, and but those that are listening, if it's not already clear, I'm a big fan of his work, right? So forgive me for gushing a little bit, is how you point to and look at what's going on underneath. And I suppose, like, I'm not a chemist, so forgive me if this metaphor falls apart, right?
Sure.
But you take a whole bunch of compounds and stuff, and then you add a tiny amount of something else that alters the whole reaction.
Yes.
And then you focusing on Michael Barr resigning, that's a really, really big deal that I think many analysts in the crypto space missed. Certainly myself, right? Now,
Right.
Let me go through some of the key outcomes from the White House Crypto Summit.
Sure.
And this is currently with ChatGPT from a little bit of research I did before this space. So one, the establishment of a strategic Bitcoin reserve, and that they're not buying it. It is from the seized Bitcoins that the government already has. Creation of a digital asset stockpile, which includes Ripple, Solana, and Cardano.
Mhm.
And again, they're not buying it. It's the stuff that they already have. The termination of Operation Choke Point. The administration plans to end regulatory practices that hindered banks from providing services to crypto businesses. Authorization for banks to custody crypto assets. So the Office of the Comptroller of the Currency confirmed that banks can now offer custody services for cryptocurrencies, including stablecoins, integrating digital assets in traditional banking. Commitment to crypto-friendly legislation. Oh, I'm just reading this smiling and suffering because it's so awful in the UK, but carry on. I'm going to carry on. Commitment to crypto-friendly legislation. President Trump expressed dedication to positioning the US as a leader in the cryptocurrency industry, advocating for supportive legislation and light touch regulations to foster innovation while protecting investors. And then establishment of a permanent advisory council. Plans for a permanent advisory council were replaced with periodic summits and internal working group meetings to ensure ongoing collaboration between the government and the crypto industry. Now, anything you want to pick up from what I've said and comment on that we haven't covered already?
Sure. Let's set the Wayback Machine a little bit. I have, when it became clear that China was no longer wanting to be in the Bitcoin mining space, let's go back 6-7 years now, and my good friend John Seth, and you can look John Seth up. He used to run a Bitcoin podcast. He used to be a very, very big deal in the Bitcoin space, in the past. Has calls Bitcoin an organism that eats energy subsidies. I'm going to do the Trump weave here. You're going to get there. So
Okay.
if you understand that, this is why China eventually had to abandon allowing all these small independent Bitcoin mining operations and pools to operate within China, because China's electricity generation was heavily subsidized, right? And so the lowest cost mining in the world was in China 8-9 years ago, 6-7 years ago. And eventually Xi Jinping turns around and says, okay, that's enough. No, that's illegal. But why? Because it was, because they were using all the spare capacity and they were generating Bitcoins at 3 cents a kilowatt hour, which was meant for Chinese people and Chinese businesses, industrial businesses, not Bitcoin mining. That a lot of that Bitcoin mining moved to the United States, and we correctly predicted that would happen during the last Bitcoin bull market, say between 2018 and 2020, and we did. And I have a friend of mine in the nuclear power industry who works in advocacy and as a liaison between the nuclear power producers and the government to foster the whole relationship of co-locating Bitcoin mining with power generation in the United States. He was single-handed took that on, and it's an old friend of mine. I won't reveal his name because he doesn't want to be known for this. And but we saw this coming forever, and he was, him saying to me at one point, dude, 6 months ago, I got laughed out of the room when I mentioned it at work, and now I'm signing deals daily, right? The point of this weave is to say the United States has been setting this up for a long time. We now have significant amounts of Bitcoin mining co-located at power plants around the country. We're here. We're in it. It's part of the fabric of the entire digital asset proof of work space to have co-located mining occurring domestically here in the U.S. So we have the market share, right, of the mining market share. It makes no sense for us to not have then the ability to integrate it directly into the banking industry. But the moment I saw that happening, I said, well, eventually this is all going to break down. That one of the things that the Biden administration will do is to try and stop that, because they work for what I would call Davos and not the United States. And I said at some point you're going to watch Wall Street flip a switch and say, we want crypto. And this is what we've seen over the last 5 years. And it's been slow and steady. And you have people like Jamie Dimon who still hate Bitcoin. That's fine. But Jamie Dimon doesn't care. He'll make money off of Bitcoin if he has to. Right? That's his personal opinion about Bitcoin. It's not JP Morgan's strategic, vision. Right? The strategic vision is to go out and make money with it. So Wall Street wants it. Wall Street understands that access to pristine collateral is the means by, and Trump certainly understands it, the means by which to wrest control of the value of our currency, the dollar, as it circulates by having as much pristine collateral as possible and converting. That means drill, baby, drill. It means, co-locating Bitcoin to power plants. It means more power plants. It means all of that. It means opening up the gold and silver mining industries. It means all of those things, and having these assets on the national balance sheet and within the banking industry to basically wrest control, I think, of the legacy control of the current global financial system from Brussels and most especially the City of London. And this is a very big deal. This is and Bitcoin and stablecoins are part of this future. And the reason why is because they're just more efficient than the old system. The SWIFT system is antiquated. The back office at every major bank is antiquated. The T+3 settlement time for credit card is antiquated, and for stock trading and for everything. These assets can be digitized, moved onto a blockchain, verified, in a trustless manner, so that we can move and we can move assets around frictionlessly and at a much lower cost, getting rid of the intermediaries, i.e. the toll booth operators, who then insert themselves into the system, making unbelievable amounts of money doing so because they have legacy power within this whole system. And then that's how you defang them. That's how you take their ability to move markets away from them. Again, how, not why markets move, how markets move. You understand that the British pound still settles 30% of the forex transactions, foreign exchange transactions in the world. You're like, wow, that's why Britain's still powerful. That's why anybody gives a damn what the British think about anything. It's not that they have a navy or a military or an industrial base. No, they own 30% of the forex markets, and the forex markets are the most powerful markets in the world. Like, not the stock markets, folks, not even the bond markets. It's currency. And so that's why this move to regulatory certainty within the United States of crypto-based businesses and banking has been fought so very hard by these people, because that was not their vision. Their vision was government control of blockchain technology, government control of crypto and digital assets, not independent, blockchains that operate whether they like it or not. Like, and if they somehow were to kill Bitcoin, what are they going to do? Then you've got multi-protocol proof of work coins like Monero and others that have moved away from one particular encryption algorithm in order to protect themselves. Like, there's all sorts of things. The technology itself is what's important here. I said for years I'm not necessarily a Bitcoin maxi, but I'm certainly a proof of work maxi for this exact reason, because that's what makes Bitcoin Bitcoin. It's proof of work. Now, a proof of work in a digital sense is insanely slow and old news and kind of Luddite technology, right? It is still lightning, light years ahead of Swift and the rest of it. And so this is why and in some ways you can even argue that Bitcoin's slow settlement times and small block size and all the rest of it, all the classic arguments against Bitcoin of this type of time that people like Roger Ver would make, and why they Trump did like Bitcoin Cash and the rest of it for all those years, is actually one of it's actually a good thing, in the same way that it's hard to move gold around, right? That means the harder it is to move gold around, the more it gets stored and then used as collateral locally, and it doesn't move. And so again, when you start thinking about things like that, right, then all of a sudden you get and you look at what's happening geopolitically, you're like, oh, these systems, right, support the move away from a globalized, a completely open, mostly tariff-free global trade, where the toll booth operators, the middlemen, are making all the money, and the producers and the consumers aren't. And that's the conceptual shift that's occurring, and that's why, frankly, City of London and Brussels want to perpetuate the war in Ukraine. But that's a big leap, and that's another 20-minute, connect the dots to get you there. But it's really important, and it's really important to understand that The world is moving towards spheres of influence with nominally closed capital accounts and domestically circulating currencies with international versions just there to settle trade. And the whole, we'll hold your debt on our balance sheets, and you'll hold our debt on our balance. No, that system is going away. And who controls the pristine collateral of all types and kinds, and who can create more pristine collateral, i.e., who can produce more energy in order to create because what is Bitcoin? It's just tokenized energy. What is gold? It's just tokenized energy. What is aluminum? It's congealed electricity, right? That's literally how the industry looks at aluminum, because it takes so much electricity to smelt aluminum. To melt and smelt aluminum, it's insane, right? So these are real assets, and they take energy to produce. And he who does it better than anybody else is, in the long run, going to win.
Yes. Tom, thank you for that. And just talking about taking it in the foreign exchange level, because I'm just looking at a chart right now about countries' holdings of Bitcoin. So if the US starts creating a Bitcoin strategic reserve, and I think there's something like over 20 states, US states, that have legislation going through to create their own reserves at state level. We're going to have a movement, I think, across the world. And little Bhutan, I'm just seeing it as 13,029 Bitcoin that they've mined, I think, over the last 8 years or so.
Who was that?
And that's Bhutan.
Oh, Bhutan, yeah.
Yeah, tiny, tiny little country, not a player on the geopolitical stage, right? I think mostly agrarian economy in the foothills, somewhere in the Himalayas, squashed between China and India. And they've got 13,000 Bitcoin, just quietly accruing it. So how do you see it, the impact of the strategic reserve at a global macro level?
Now, again, I think I've connected those dots. Ultimately, it's there as the basis to form the foundation of a pile of pristine collateral for the United States to be able to monetize and invest. Okay, so if you take the totality of everything that Trump has put out there, and you strip out all the rhetoric, and you strip out your hatred of Trump, or your life, or how much you love Trump, or anything else, and just look at what he's talking about doing. He's literally talking about opening up federal lands to more oil and gas production, timber, gold and silver mining, precious and rare metals, and industrial metals and precious metals, all the things you need to run a modern economy, right? And do you think he's going to sell those federal lands? No. He'll take a royalty off of them the same way that, look at Russia's model. Russia's got a very simple model for all the oil that it produces. It's got a bunch of state-owned enterprises like Gazprom and Rosneft and whatnot. Then it's got a bunch of mostly private, like TNK and Lukoil and others. And the government just sets an internal tariff rate on how much money they skim off the top of those companies. And it's based in Russia. I know this. It's based on a sliding scale based on the price of the barrel of oil, right? And the lower the price gets, the lower the tariff rate. The higher the price gets, the higher the tariff rate, up to a maximum of, I think, 20%. You think we're not going to do the same thing here and then take all the profits that those royalties generate and stick them in the sovereign wealth fund? That's exactly what the Russians have been doing. I mean, they run their government, on this, and then they also, skim some of that off and throw it in the sovereign wealth fund, and then use the sovereign wealth fund to, to add to the national balance sheet. Like, they don't report what's in the sovereign wealth fund. The Russians do. They report their foreign exchange reserves and the gold that they have on the Bank of Russia central balance sheet is what gets reported every month. Remember, that's reserves of the central bank. The Russian central bank has over $600 billion worth of assets against an economy, a nominal economy of $1.5 trillion. It's insane. It's in purchasing power parity. It's much higher than that. It's bigger than Germany's. But how much gold do they have? And I think they've got 2,300 tons, something like that. How much gold do you think they have in the sovereign wealth fund? Do you think the Russians who, produce oil at $9 a barrel, aren't mining Bitcoin and stuffing it in the sovereign? You're crazy. Of course they are. Would Putin say this to you? No. Is Putin the old intelligence agent? Would he tell you that he loves Bitcoin? No. Why would he? It'd be dumb. So the strategic purpose here is, again, to create a balance sheet worth of national assets that would then back a domestic version of currency, the dollar, that isn't backed by the full faith and credit of the United States, which is the current system we have today, which allows foreign creditors to pull a vig off of our labor. Those days are going to end. There are going to be treasury bonds, U.S. treasury bonds, to circulate around the world. There's most likely going to be another asset class of treasuries created, or something, or instruments created, that are only going to be offered to American citizens. And effectively, you'll have domestic, they'll probably be digital dollars. They don't necessarily have to be programmable, like the WEF and the ECB are talking about. They just have to be like, 90% of the dollars that exist today are all digital. And there's no programming associated with them, but the money is, but the money is tracked, and you're not going to be much you can do about that. So, the question now is, who's going to have the system in place who treats capital the best as opposed to the worst? Capital flows to where it's treated best, not necessarily good by anyone's particular definition of the word good, for very small or large values of the word good, just better, right? If China treats, for example, if China treats capital terribly, you only, as the United States, in order to get the capital to flow to you, only have to treat capital 1% better, and all the capital will flow. Okay?
Yep.
Okay, and that is the model. And so that's the thing you have to keep in your head. We can still hate the way we treat capital in the United States and go, that's still a shitty system. Like, well, yeah, it is, but it doesn't matter. It's 1% better than China, and it's 5% better than Europe, and no one's investing in Russia because of other legal barriers. Well, solve that equation. Where does the money go? Flows into the U.S. That's what Trump is setting up.
Goes to the US.
Flows to the U.S. What Trump is setting up is a massive arbitrage for capital to come here. We're not talking 1% or 2%. We're talking 20%. If you listen to everything he's saying, it's like a 20% win. And we're going to make it so overwhelmingly good to come and invest in the United States, you would be literally our enemy not to do it.
Yes. When you said only 5% better than the European Union and the UK, I thought, no, a whole lot better. I want to move on to Ripple.
Sure.
And the role that you've been saying about Ripple, which will make XRP Army very, very happy.
Sure. Well, let me start with. Go ahead. Let me start by saying one of the things I didn't mention was, and I have been saying for a long time, is everybody says, well, the first thing I always said was, what'll bake your noodle is that one day the Federal Reserve is going to want a higher gold price. We're already there. The second thing that'll bake your noodle is that the Federal Reserve will put Bitcoin on its balance sheet. Well, Trump is talking about putting it on the sovereign wealth fund's balance sheet, so we're already at that second bake your noodle mode. Why? Because, again, the pristine collateral argument isn't about Bitcoin per se. It's about what Bitcoin trades against, which is the stable coins. And the stable coins, in order to be trustworthy, have to have real assets and have to prove over and over again that they can survive a bank run. Now, which one has done Tether? Over and over and over again, Tether has been attacked multiple times, both legally and by the market, in order to try and break the peg and prove that Tether is lying, that they have $113 billion worth of assets, or whatever their current market cap is, in a bank sitting in the Bahamas somewhere. Good news for you. The time that Tether's been attacked, the peg is broken for 12 hours, or as long as 2 days, and then it's righted itself, and which proves that Tether's not lying when they file their quarterly asset statement with the Southern District of New York with Letitia James. Well, then we come to find out that Tether's actually overcapitalized, that they have more than the amount of money that they've issued, or the number of Tethers they've issued. Because of that, but what's the primary thing they own? Short-term treasury bonds. What is the primary need for U.S. T-bills? It's interbank loans, known as the repo market. So Bitcoin is already performing via Tether as proxy. I've been saying this for over 2 years. it's a clearly defined role as a heat sink for marginal U.S. T-bill demand in order to keep in order to keep the repo markets, and that means the banks, liquid. Again, how money moves, not why it moves. Once you understand that how, now you can understand, why would the European Union, or why would, Bitcoin's enemies, or why would the United States enemies not try and create a run on the short-term treasury market and use Tether as the back door, as the means by which to do so. And they've done that many times. So every assault you see on Bitcoin is really an assault on Tether, which is really an assault on the U.S. Treasury. Okay, or at least partly, at least in that framework. XRP is for all intents and purposes, XRP is a forex platform. It's a replacement for both the traditional forex business of City of London and Wall Street and other financial centers, and Swift, the messaging system, at the same time. Swift does not move money, right? Swift is just the protocol by which banks talk to each other in order to allow for the movement of money. It's not hard. It's just code. And I've been saying I've been on this story since the first time Obama threatened the Swiss with opening up their privacy laws back in 2010. Obama went after UBS over Nazi gold, right? Over not laundering Nazi money, and it was all bullshit. But I remember Jim Sinclair at the time, God's rest his soul, saying this is the dumbest thing I've ever seen. This is the financial equivalent of going nuclear. Because once you go nuclear, once you threaten nuclear weapons, you either have to back that up by launching a nuclear weapon or be revealed as bluffing. Now, UBS, it worked for Obama in 2010 with UBS, but it didn't work for Obama in 2012 with Iran, when we cut Iran out of SWIFT. Iran said, that's nice, you're not going to nuke us, and we're going to figure out how to survive without you. And I could do 20 minutes on how Iran did so, but you can go look that stuff up. When Iran did it, and then we tried it again with the Russians in 2014 over Crimea, or 2015 over Crimea, the Russians did the same. And later, we threatened Russia back then, and then with the war in Ukraine, we did it, and the Russians already knew what to do because they had already de-dollarized all their markets. They had already built a SWIFT replacement. So did China, because it's just code. And it's not particularly sophisticated code either. It's not some secret thing. It's just a financial messaging service. Ripple combines Forex, the intermediary Forex token, with Swift. So you have messaging. Hey, I would like to move money from Santiago, Chile to Istanbul because I'm a drummer and I want to buy cymbals from Pergamon or Zildjian or whomever, right? I'm a drummer. I can't help it. It's my metaphor. So a bad drummer, I might add, but a drummer nonetheless. So now, how is that handled today? Well, it's handled really quite straightforward. It's actually quite complicated, not straightforward at all. You got to go the credit card that the guy's using to tell the Turkish cymbal manufacturer that he wants to buy his cymbals has a relationship with a bank. That bank has a relationship with a foreign exchange network in order to figure out how to get his Chilean pesos converted into Turkish lira for the cymbal manufacturer to call up DHL and say, here's a package, send it over to Santiago, Chile. There's a drummer over there that wants a couple of 12-inch splashes and and a 16-inch power rack or an 18-inch power rack. That's what they want. That's the gig. How does that happen? Well, it's an entirely complicated mess that costs anywhere from 8 to 15%, depending on how esoteric the two currencies are. Like I picked specifically the Chilean peso and the Turkish lira. Neither of these currencies circulate for the most part outside of their home countries. So what do? Well, I'm a British bank. I'm an American bank, but generally let's talk British bank. I'm a British bank. I say, I'll take that trade. I'll buy your pesos, convert them with pounds. I'll give you pounds, and then they'll use the pound as the intermediary, right? And they'll convert the pesos into pounds and the pounds into lira, and then they'll reverse the trades, and Bob's your uncle, and the whole thing happens. And they take a vig on that. Moreover, each of those transactions costs money because now they take the pounds, they've got the pesos, they take the pounds, now they got to figure out how to get the lira, they got to go get the lira, and then they make the swap, and that's what undergirds the British pound is that demand because I sold pesos to buy pounds, to sell pounds to buy lira. Okay, like, and you have to understand that exchange rates. This is why things. This is how exchange rates fluctuate, and the relative demand of one versus the other is that at some point the British pound is the denominator, right? The Chilean peso versus the British pound, the Turkish lira versus the British pound. The British pound is the denominator in all those transactions. Currencies don't. Everything has a denominator, folks. U.S. dollars versus U.S. dollars. Oh, U.S. dollars versus USD tether. Bitcoin versus USD. Bitcoin versus gold. Bitcoin versus everything has a denominator. It's a comparison. All exchange rates are a comparison versus another currency. Once you understand that Ripple can replace the British pound and do it for 3 cents in 6 seconds, as opposed to 3 to 4 days for 15%, now you understand why Trump mentioning Ripple, XRP, in this context of the sovereign wealth fund and integration of the digital assets and banking and everything else. Now you understand what that means. It means he wants that business. And I think Brad Garlinghouse, the CEO at Ripple Labs, didn't he just align himself with the Trump administration in some way? I know I saw a thing. I'm literally asking the community on this, or to look it up on Grok, because I saw something about it the other day, but I didn't commit the whole story to memory. It's a big deal. Donald Trump Jr. about 2 months ago made a statement about wanting to do away with capital gains tax on all U.S. made in America cryptos. And on that list were Cardano, Ripple, there was the other one, Solana, yada, yada, yada. And this is the point. And then Coinbase turns around the next day and makes an entire made in America portfolio of cryptos on the website for people to for them to trade and speculate on immediately. Doing away with capital gains tax makes them currencies. It means that you don't ever have to pay capital gains tax if you bought Ripple at 65 cents and then you sell it for $3. You don't owe the government, short or long-term capital gains tax, which is why the Ripple SEC lawsuit, I always felt, was a move by Jay Clayton to tie Gary Gensler's hands as SEC chairman and force him to continue to defend the undefendable, which is that Ripple was a security. And if Ripple wins, and it has already won that fight, it's just a matter of the SEC, at the right moment, dropping the case, which is what will happen. That was done on purpose because it was done to sniff out whether Gensler was really pro-crypto or not. And of course, he wasn't. He worked for the Biden junta. Come on. Like, by definition, you should assume that he was a crypto bad guy. It was also, you should assume that when they were trying to sell him to us as some kind of crypto good guy. I'm like, really? That guy? No. Oh, come on. It's like, it was blatantly obvious what was going on if you understand how the world actually works. And I hate to use the word actually like I'm some kind of fucking Redditor or something, but so there it is. Like that's the layout. That's the bull case on Ripple. And I don't know who's going to win this digital forex world, or whether there's going to be a nice hey, there's going to be a nice big fight, market share fight amongst 3 or 4 of them. Okay, sounds good to me. I don't care who wins. I don't know who has the best technology. I don't know them. I don't know Cardano at all. I don't know Solana at all. I have some understanding of how Ripple operates, and I know very well how Bitcoin operates, and I pretty much understand how Lightning Network operates. So everybody's going to be fighting for market share in the payment layer space, which is where all the money is.
Yeah.
And
thank you so
importantly, the traditional financial system that has dominated the world since the Dutch created the first stock market back in the 16th century isn't over.
Yeah.
That's what's important.
And one of the things that you're alluding to is something it's quite a dominant theme in your political analysis about the war between the United States, Trump as a sovereigntist, and the City of London. How the remnants of the British Empire still want to rule the world. Now, if people want to go into that, because then we're in the sphere of politics, then do check out Tom's work at Gold Goats and Guns, or tomluongo.me. There was something I wanted to ask you, which was about the stable coins, and you've said it about the role of Tether, but what about the other stable coins, USDC, the different alliterations of other stable coins, DAI? Do you see any role for them, or are they all going to be second base to Ripple and Tether?
It's a good question. Ripple just announced their own stablecoin RLUSD, and why did they do that? Well, as Garlinghouse pointed out, he's like, look, we were settling 20% of the Tether trades on the Ripple blockchain anyway, so why not issue our own stablecoin? So then the question then becomes, that's part of the reason why he did it. But Tether's a particular business model is important, and because of what they've achieved, which is they have a big pile of assets, real assets, treasuries, a mix of treasuries, gold, Bitcoin, and other things. I love the fact that the people who still want to believe that Tether is believe all the Tether FUD that's been coming from CZ Finance for the last 8 years, because that guy was just wanted Tether's business. That now Tether's backing itself with Bitcoin. Maybe it's a little bit of a quote unquote circle jerk, but Tether's also overcapitalized. So if Tether's parking its overcapitalization, meaning they say there's 113 billion Tether in the world, and they've got 125 billion dollars worth of assets, they're overcapitalized by 12 billion dollars. Well, what if that 12 billion dollars is what they have? They're holding their Bitcoin. They're holding in Bitcoin, and the gold and the T-bills and the corporate debt. And they own some corporate debt as well. And I think they own some Apple debt or whatever. If you just wanted to preserve the value of an asset, again, and if their investment portfolio is strong, like T-bills paying 4.5%, 4.25%, Apple bonds probably, I haven't looked at them, but issued with a 1% coupon, probably trading at 0.6% or 0.65, 65 basis points, like they're up 35% on that. Dude, Tether could be overcapitalized simply because they're good at managing money. And then what, we're supposed to believe this FUD? It's nonsense. So the question about the other stable coins is very simple. Jerome Powell has been hostile to the stable coins in the past because he sees them as synthetic dollars, and he's not wrong. But I think the role of the stable coins is to act as the dollars in the international market, to replace the euro's dollar system. But we still control the ultimate pricing of dollars because we control the dollar. We control the Federal Reserve. We control who controls the debt indexing rate for the U.S. economy, which is known as the Surface Overnight Financing Rate, because we've sunsetted LIBOR, the London Interbank Offer Rate. The United States has control over the value of dollars worldwide now, and they should, because it's our currency. But if you need access to the equivalent of dollar liquidity, well, there's Tethers, RLUSD, there's USD coin, make a stable coin, put some reserves against it. Now you've got some. It's not hard. And the market will decide whether or not the collateral that you have behind backing your stable coin is worth a damn or not. And that's what the market will decide. But the international dollar, the quote unquote euro dollar, which is literally nothing more than dollars stuffed in foreign bank accounts, is going to be replaced by the stable coin. And those will be the tethers, all puns intended, linking the domestic economies that are operating behind tariff walls and capital controls that say, we're going to allow global trade, but the settlement of that trade will happen only through trusted intermediaries and only on publicly available sources of information. We're going to do away with this, obfuscatory nonsense of having to try and figure out how much money the British Crown has skirled away in the Cayman Islands or this place or that place or anything else. Those days are ending. And that's what's so very important as well to all of this. So the stable coins will take that business. And, there's no need for the 18 London banks getting together and deciding what the price of US dollars is at 5 o'clock in the afternoon every day. It's bullshit. It's nonsense. It's dumb. Why? And when you explain this to people, why would the United States go along with this? I'm like, because we're run by traders? And then they look at you like, yeah, that makes sense. But I love Obama. Well, sorry, he was a Manchurian candidate. Now you have some work to do with your therapist. That's not my problem. I'm just relaying to you what's going on. How you deal with that emotionally is between you and your therapist.
Tom, Tom, that is just brilliant. Something else you've been saying about the end of LIBOR and the emergence of SOFR, and you've been talking about it in your analysis to your patrons and in your podcasts and your blogs, tomluongo.me, for years now. You saw it coming, and you've been spot on. And what I hear in what you're saying is the emergence of a brave new Bitcoin world and the end of, and you've talked about it, the end of central banking as we've known it. They're like the end of the world being run by banksters who are robbing us of our liberties, robbing us of our freedoms,
Sure.
out to destroy our livelihoods and our lives. The other thing that I want to acknowledge you for, two more things I want to acknowledge you for, Tom, is one in your analysis, Tom's not the only one that does this, but I invite everybody to find analysts who go beyond the superficial. You know, the thing that you said about the guy, I forget his name, Michael Barr.
Mm-hmm.
Yeah, at the Federal Reserve. That's not the sort of analysis that you're going to get on the mainstream media. Just while you were talking, I looked at the heading of there's an article on the BBC about, you'll love this, Tom, about Trump's strategic reserve. And the article is headed, "A Pig in Lipstick, Trump's Strategic Bitcoin Reserve Criticized." Well, that's all I need to know.
Well, you need to know if the Guardian or the Times or whatever are against it, then it's obviously a good thing. Like, you know what I mean? Like folks, I have a very simple heuristic that I've used for a long, long time now. I assume they're lying to me about everything.
Yes.
And about everything. And I'd like to live in a world where they weren't lying about everything. And so it's that whole distrust but verify is the pithy way of putting it. Look, I don't trust these people, and I want you to verify for me that you're telling the truth. And they never can. And certainly not the BBC. Certainly not the Guardian or the New York Times or the WAPO or any of them. And PMSNBC, because I like that much better than MSDNC. Because, Rush Limbaugh was the real pioneer on this stuff. Not that I agreed with Rush on everything, but as a communicator, the guy was without peer in, I think, human history. So yeah, but the thing here is that you can. Well, I don't know. I'm not sure what I was going to say. I'll just shut up. Go ahead and talk about something else. You said so because I got lost. Because that happens.
Yeah, no, thank you. That's what I've learned so much from your analysis over the years. I really, really have. So really, really appreciate it. I do recommend that people go check Tom out, tomluongo.me. And also, Tom, the other thing I want to acknowledge you for is how well behaved you've been on this space.
Well, I know, it's a new space. I've only got one topic so far. I was keeping track.
Yeah.
So it's early in the morning. It's 11. I don't. I don't. Oh, that's not true. I start swearing the moment I get up because my cat's yelling at me to feed him. It is what I mean. The thing is that sometimes everybody's frustration gets the better of them. It sometimes happens to me when I'm on a podcast or space or whatever. And this is important because it's important now in this moment where we're watching everything change quickly, and we're watching certain promises that have been made, and certain this and certain that, like all of the, and we're at a moment in time where our belief system that anything good can happen could actually be happening, and that fundamental milieu that we've all lived in and we've all been, imprinted with, and the buttons installed and everything else. Understand that the bad guys aren't giving up. They're now trying to gaslight you into believing that there's some kind of internal divisions, or is Pam Bondi a traitor? And everybody's now been newly minted OSINT, or Whitney Webbs or whatever, or myself, like, oh, I don't trust any of these people, and I'm angry, and so Bondi, screwing up or being outplayed by a bunch of deep state assets within the Southern District of New York and the FBI is now prima facie evidence that she's working for them. Like, it doesn't work that way, folks. You need to take a step back. You need to take a deep breath and realize that you're going to win a lot, and that every time there's a setback is not evidence of something greater. It's easy to get lost in that because it's easy because we're also conditioned. I am too. I'm like, I overreact to things and abreact to things all the time. Don't get me wrong, and that's part of the reason why sometimes I go into apoplexy mode and start swearing like I've got Tourette's syndrome, which maybe I actually do. But then there are other times when you have to just take a step back, take a deep breath, go pet the dog, think about it for a little bit, and then move on. I've gotten to the point now where I don't react in real time to a lot of things that are happening, and I resist calls from the community to have an opinion immediately. And
Yes,
just you have to
there's
do
too
that.
there's too much happening too fast.
Mhm.
Right, we don't know what's going on.
And
Too much obfuscation.
there's a lot of
Too
psyops.
much. Yeah, a
And
lot of psyops.
the psyops haven't ended. Okay, there's a big psyop out there, folks. You want to know what the big one is? That's the biggest one of them all. And I lived in that world for close to 20 years. Ready? The United States is broke. That's a psyop. The gold is an important ox. That's a psyop. Blah, blah. That's a psyop. The people who are broke are London. The people who don't have any gold,
Yeah.
who have been hypothecating gold and can't deliver on time, London. COMEX, London. Yeah, there have been times when the COMEX has declared force majeure and settled people standing for delivery behind the scenes in dollars. It happened during the financial crisis. I know for a fact that it did. But reality is, folks, that we have tremendous assets in the United States, as Trump and DeSantis both talked about. At like they're not lying when they say this. But the problem is that they've been written down to zero, i.e., they've been taken off the market, and therefore they have no marketable value. Meaning, then they can't be put on the book value of the United States to offset the liabilities. When you see somebody only talking about the liabilities of the United States at this moment in time, they are either lost in an old paradigm or they are actively an agent for continuing a psyop that was very, very successful. That's the moment we're in right now. And that's what you need to start distrusting. You need to start distrusting this idea that, hey, maybe the United States, no, how about trust the idea? Hey, maybe the United States isn't broke. Maybe we can get out of this. Yes, we have, but let's get back to real numbers. When you strip out government spending, both at the federal and state level, and you realize that nominal GDP of $27 or $28 trillion is actually 40% less than that because none of that is real. Then you ask yourself, or wealth generating, then you say to yourself, well, maybe the U.S. economy really is only $16 trillion. But then you have to do that. And then when people say that, and then they ignore the fact that how much of China's GDP is government spending, how much of Russia's GDP or Europe's GDP. You have to ask yourself those questions. You have to always compare apples to apples. You can't strip government spending out of the United States, gross domestic product. Famously, I hate GDP as a statistic. I think it's stupid. But if we're going to compare apples to apples, it's the thing we have, so we'll use it. Then we have to do that same analysis for everybody else.
Yeah.
And then it becomes a very interesting conversation.
Yes. Now, listen, we want to finish up now, right? Because this is for an hour-long space, right? And people can find your work on tomluongo.me. And then, where you stray in, you do a lot of really great political, financial analysis. And just something I want to finish up on what you were saying and how you started as a chemist is something I got for myself, right? That if I want to consider what's happening in a particular process, I got to look at all the elements within that process, how they interact with each other, 1-to-1, 1-to-2, in different mixes, but also how they might interact with the vessel that they're in. I got to take into account the atmospheric pressure. I got to take into account the temperature, all sorts of factors. And that's what makes your analysis so profound and powerful and, in my experience, accurate, because you keep looking like what else is going on, and not just stopping with the superficial.
Well,
Tom, anything you want to say about where people, to finish up and where people can find you?
Just to finish up on that real quick, Rich, is to say, you can't just always assume that the three dominant sources of error in your experiment are the same experiment to experiment. Like every time you run the experiment, you're going to uncover new sources of potential error, and they may actually be bigger than the ones you assumed in the first place. In a financial analysis, everybody assumed their big source of error, is the U.S. economy and its effect on everybody. Right. So, in this ideal gas law version of a financial model, which is what you literally just invoked when you were talking, PV over T equals PV over T. You have to Pivner, PV equals NRT. You have to realize that there may be other factors. In terms of the ideal gas law, there are only three: pressure, volume, and temperature. But in geopolitics, there are hundreds, because information is fungible. And what you think you know, ask yourself, how do you know what you know? That's a big question. And all of a sudden you start to realize, ooh, where did I get that information? How did I get that information? Who wants me to think that way? Why do they want me to think that way? And you keep doing that heuristic in your head, and eventually you'll come to some much more profound for yourself conclusions about how the world operates. You can find me over at tomluongo.me, as Rich has said many times. You can follow me here on Twitter at TFL1728. No lie, folks, I'm a prick on Twitter. Like, I make no bones about it. I'm really bad. But you know, I'm also generally right. So you know, it's kind of hard to like not, you know, like it's just mean. And look, the people who are trying to enslave us all and make us eat bugs, they deserve nothing but our full-throated opprobrium at every moment. At every, you know, and we've got people who have been their quislings and their fellow travelers for years, and they were wrong, and they need to be shouted out of the, you know, shouted out of the space and the common square, and you know, embarrassed for being who they are. It's very important. This is part of how we start to deprogram the people who have been deeply programmed with the matrix, for lack of a better term. I'll leave it there.
Tom, thank you so much. Really, really appreciate it. And all the best. And again, if you want to follow Tom, tomluongo.me. And thank you to the Coin Republic, which is thecoinrepublic.com, for hosting this space. I will be back, not next Saturday, actually next Wednesday, this coming Wednesday at 4 p.m. UK time with some other fabulous conversation on the Crypto Pulse. Thank you all. All the best. Bye-bye.